Well, for decades, development funding has been the domain of the World Bank and the International Monetary Fund, and that is until BRICS decided to challenge it. This is Tonight. I'm Bruce Whitfield, and tonight we speak to Martyn Davies, Chief Executive of Frontier Advisory, and Christopher Wood, who's a researcher in economic diplomacy at the South African Institute of International Affairs, all about the new development bank. It's the bank that has been born out of the recent BRICS summit in Brazil. Well, is it the biggest waste of time in BRICS history, or is this the most significant development we've ever seen, Martyn Davies?
Good evening, Bruce. I think it's a question of geopolitics versus geofinance.
But is it geopolitics or is it geofinance?
I think it's more of a former, to be honest. I think initially there's maybe self-induced pressure by the BRICS government's leaderships to institutionalize this pretty loose grouping. And first and foremost, because all of us have to varying degrees this state capitalist sort of intent from the respective current leaderships, this has manifested itself in this BRICS or New Development Bank. State directing capital in a so-called developmental fashion, supposedly, which is scalable into infrastructure and driving growth development in their respective regions.
We got the World Bank, we got the International Monetary Fund. Do we really need a new development bank, Chris?
Well, I think if you look at the state of the infrastructure in the BRICS, the answer is clearly yes, and in the rest of the developing world. I mean, we have a lot of development infrastructure as it is, but the capacity of these organizations aren't up to the challenge of meeting the massive infrastructure deficit that we have. I mean, we need trillions of dollars of investment in the African continent to get it competitive with the rest of the world. So more funding is always good. In terms of undermining the World Bank, I think that would be very bad, but it doesn't look like the BRICS Bank is aiming to do that. It looks more like it's trying to partner with these traditional organizations.
But how is it practically going to work? I mean, what we've got to do is, as a country, commit capital to a bank which is going to be run for the next 5 years by Indians in Shanghai. I'm not seeing too much South African interest coming through there. I see a lot of give and not much take.
Well, there's a lot more to the structure than that. There is a director and there's a board of governors, and we will have a say in how this money is directed. But the most important thing is that eventually we're going to have to put capital aside to invest in infrastructure. And when we do, markets are going to look at us as South Africa alone looking for credit in order to invest. But if we are partnered with the BRICS countries and we tap into Chinese credibility, Brazilian credibility, Indian credibility, we can get access to credit markets at cheaper rates than if we did it on our own. So I think there is the potential that so long as there is investment from this bank in South Africa, we can fund our infrastructure at a cheaper rate than if we did it alone.
Do you agree with that one, Martyn?
2 points. Arguably the most important asset the South African economy has is its world-class or world-leading private banking sector. Mm-hmm. The other BRICS countries and the vast majority of emerging markets do not have what we have. That being so, if we have such a deep capital market, which we do, highly functioning, very well governed, very established private banking sector, why do we need another developmental finance institution?
We have in South Africa the Industrial Development Corporation, we have the Land Bank, we have a whole bunch of state-owned enterprises which feasibly, scaled up, properly managed and decently run, could fulfill the obligations that we might expect something remote to do on our behalf.
I think the second point, Bruce, I agree. The second point is also we're living in quite odd sort of financial times. I mean, the cost of capital in the developed world is practically zero.
Yep.
So it's not about capital, it's about talent. Capitalism versus talentism, Klaus Schwab often says from World Economic Forum. Yeah. And this is the case. So that being so, I'm not sure in this day and age what development finance actually is, because we refer to lower cost finance. Well, finance in Europe is basically zero. So how much lower cost can you be?
Well, it's what they charge us for it. I mean, Chris, you'll be better informed on this than either of us, I suspect, in terms of development finance. Define it as we see it as BRICS countries versus what the World Bank and the IMF might see it as being.
Well, I mean, I think the World Bank and IMF's mandate is slightly broader. So if you look at it as the BRICS countries and the BRICS banks particularly, you're just looking at infrastructure development. I mean, Martyn's right. We need talent. We need to go into that type of specialized economy. But talent can't do that much if the lights are turning off every few hours. You need to invest in that basic infrastructure to unlock the capacity of our talent and unlock the capacity of our broader economy.
But we seem to be suggesting that you create this emerging markets development bank. Countries then commit capital to that bank. That bank then starts lending it back to the countries that have committed the capital in the first place. Forgive me for being dumb, But how does it work in practical terms?
Well, it basically works the same way that a bank can do these types of projects better than you could on your own. Because the development bank will have greater credit worthiness than the South African government on its own, because it's backed up by 5 countries, it's going to be able to tap into international credit market at a lot cheaper rate. Now, of course, what Martyn's talking about...
Martyn makes the point that money is free anyway.
Well, money is not completely free, but it can be catalyzed particularly, and this is the most important thing. I think Martyn touched on the key thing here, that our financial sector is very developed. It's got a lot of resources, got a lot of capacity. What it doesn't have is the capacity to take on risk alone. It needs co-finances in order to take on massive infrastructure projects that go on for a very long time and that require massive allocation of resource. And that's what the BRICS Bank can do. It can catalyze the existing finances.
And I mean, if it was as easy as the private sector stumping up the capital that we need for our infrastructure development, well, it would do it, because there's an incentive for it to do so. Maybe it just doesn't have the capacity, as Chris suggests, Mark.
With capacity, it's also, what I'd like to see from this bank as it develops is we cannot have another World Bank, not in terms of mission, but in terms of bureaucracy, long, very long leading times, and over-politicization.
Hold on a second, but isn't that exactly what is going to happen?
Seemingly so.
And that's the thing, especially when you're doing it across geographical borders, across continents, across cultures, and across a bunch of countries that don't really have that much in common other than a guy called Jim O'Neill.
Well, originally, dating back a dozen years or so. But, already we're seeing it, is if we're having debates, and there have been in the weeks leading up to this summit in Brazil, debates around where will it be headquartered, who the chairman is, who the chairman board of governors is, it's Indian or it's Chinese or it's a Russian or South African, already is becoming politicized.
Absolutely.
So how do we get a professional grouping of bankers who will land on apolitical, non-political lines to projects that are, again, not should we say, country strategic projects as often designated, but rather on the project merits themselves. And look at ourselves, talking about the power sector, look at Eskom. Is Eskom a capital problem or a managerial challenge?
Is that a rhetorical question? Because I'd love to answer it. I suspect it's a managerial issue.
Certainly, and I think a lot of that's what I'm referring to. Someone said to me, maybe very simplistically, saying, I've never seen a good project on the continent that can't get financed. So that being so, is how do we streamline bureaucracies, minimize the politics to get finance from wherever into ultimately economically enabling projects, be it hard or soft infrastructure, minimizing politics, rooting out corruption, and getting through bureaucracy.
And that's the problem. And none of the countries involved in this new BRICS Bank have got spectacular track records in dealing with any of those issues in their own backyards. Now you just
except the Chinese. No one does development finance quite as well as the Chinese do, but even abroad.
And the Chinese are going to be the dominant force in this bank.
Correct.
Why don't we just ask them to run it and get them to do it, and we simply become beneficiaries of it?
Well, let's hang on here. I mean, you're right that this is going to be a politicized institution. You can't avoid the politics. This is a geopolitical formation creating a geopolitical institution. But the pressure from that political consideration is to compete with the existing multilateral banks, the types of the World Bank, African Development Bank, Asian Development Bank. And the way that you streamline bureaucracy and put pressure on these banks to become better at lending more effectively is to have competition. And that's what the BRICS Bank does. It adds competition that the World Bank doesn't have right now. Does it really add competition,
or does it simply oblige members of the BRICS Bank to use the BRICS Bank?
Well, I don't think the BRICS Bank are going to walk away from the World Bank just because they've got their own bank as well. They're going to share this burden. And remember, it's not even just only the BRICS countries that have access to this bank. Sure. It's also the rest of the continent, particularly the rest of developing countries broadly defined.
What's it going to cost us?
It's going to cost us upfront $2 billion. $10 billion pledge in terms of callable capital, and in the long run, that's probably going to move up to $20 billion when they expand it.
Okay, I mean, we talk dollars, right? And the currency we know is vulnerable. 200 billion rand in terms of capital requirements over time. That is a fifth of the national budget of South Africa. Where does it come from?
It's a good question, but it could come from a number of places. How the government funds it, that's one question. But
they're going to borrow from the World Bank to fund the BRICS Bank.
That would be a very clever way to do it, actually. But the core question is not where the money comes from. I'll leave that to Treasury. But the core question is whether or not,
which I'm hoping to
but
establish.
I'm afraid the core question is whether or not it's a good investment. Yeah. Right. So if we get infrastructure development that is cheaper and that's effective, then we get our money's worth, and that's all that we should be worrying about right now. And there is the potential, at least at the beginning, that could happen if we use this mechanism right. There's also the potential it could be a waste of money, sure, but I don't think we should make a decision
where are you putting your bets? No, but why not? Let's put bets on it. There is an old analogy saying a giraffe is a perfect example of a wild animal designed by committee. I mean, there's just nothing sane about the design of a giraffe, and one gets a sense that this new development bank has been designed precisely by a committee. It's got a particularly long neck, it's got a small head, and and it just looks ungainly and awkward. Very beautiful, very attractive to look at, but is it practical? And that is really the question, Martin. 5 years from now, do we go, well, that was a stupid idea, or do we go, thank goodness of the great foresight of the BRICS leaders at the time?
5 years' time, lending will start to kick in. I think the initial few projects they finance will be very, very telling. I know, particularly from the Chinese perspective, to an extent the Brazilian, the finance will definitely be tied to the interests of state-owned companies or state-aligned companies in those two respective countries. I don't see the Russians as being too dissimilar. I think for us is another measure of success for me would be, well, this is, after all, SA taxpayers' money, savings. So are the interests of South African corporates being looked after as this capital is lent, i.e. what is our involvement in these projects, in the supply chain, in the contracting.
Do we see the Public
projects?
Investment Corporation stumping up the cash, for example, taking government workers' pensions and using that to fund the BRICS Bank? They've used it for political gain on the African continent in the past 5 years. It could very well come from there. 5 years from now, do we regret it? Are we grateful for it, Chris?
I think 5 years from now we'll have a giraffe maybe, but it'll be a giraffe with a AAA rating. And I think that'll be a lot higher than South Africa's credit rating. So
will it be lion-proof?
That's a good question. Hopefully we're working with the lions, the World Bank's running around. But I think if we get that, if we were able to capitalize on that rating that I think the bank will attract, then yes, it could be worthwhile.
Interesting views coming through this evening. Thank you both for coming in. Dr Martyn Davies, Chief Executive of Frontier Advisory, and Christopher Wood, who is a researcher in economic diplomacy. I beg your pardon, because that's big, economic diplomacy. First time I've ever heard of it, at the South African Institute of International Affairs. Thank you for watching. There'll be more tonight, tomorrow. Until then, bye-bye.